Good day, Divergence Traders. How y'all doing today? It's Friday, TGIF, time to party. If you made some points in the market. So we have a little pullback. So we draw it from here to here, hidden divergence, bullish divergence. And from here to here, okay, it is diverging. One's going up, one's going down. So anyway, the entry would have been right there. And it went up 100 points for you. And to all-time new highs. How do you like them apples? Yeah. And along the way, we had one of my lower close. Buy it on the next candle of the opening of the next candle, and up it fucking goes. Okay? So that was a successful trade. And then we turned here a corner. That's why it's hard to hold on to trades for a long time, because 80% of the time the market is always turning fucking corners, going the other way. You know, and if you didn't get in down here somewhere down here, and you got in up here, and it goes up here, and you're holding on to your hopes and dreams that it's going to keep going because we just made all-time new highs, doesn't mean it's going to keep going. And then you see what the motherfuckers do. Wham! And then a little retracement. And then whammo! Another big retracement. So, if you're long right here, guess what would be happening right over here? You'd be bailing out of your trade going, fuck, I just got fucked. Why did it get fucked? Because I bought high. Sometimes buying high works, but we all know the famous saying, buy low, sell high. It's no secret. It's no shh. No, it's the reality of the market. Okay, let's move on. Our first trade to the downside, and how would we know to sell instead of buy? Because this stupid, simple little moving average called the 5 is below my 7 EMA moving average shift 1. Okay? Just thought I'd throw that in there because so many people go, what are those moving averages you have on there? They're so good. They're so good. They like stay above for long lengths of time and they stay below for long lengths of time, right? And all that it is shift 1. If you don't know what I mean by shift 1, let me show you. Okay? So it's the EMA 5 exponential on the close, okay? And then I have the 7 EMA exponential on the closed, but I have it shift 1. See? That's what gives it that separation from the 5, which is from here to here. And when I first created Forex Pipsnagger in 2009, my whole system was based on the gap between the two moving averages I was using at the time, which was the 21 EMA and the 10 EMA. But that was a long time ago, so I've tightened them since then, and I've made them more, how would you say, lean, more mean, kind of thing. So I know a lot of people don't believe in moving averages, and I don't blame you. They will criss and cross all fucking day long, but you just got to know when to use them and abuse them. Anyway, right now as we're sitting here and I'm talking away going ba, we just did a nice scalp trade, and I'll show you that in a second because I'm going to show you all of them. Like I said in the video the other day, if you make your chart as big as you can be, the 5 is below the 7, so that means sell trades only. For now, until the market changes, of course. But it worked. It worked really well. Let me show you all the trades all the way down. Higher close, right, on the opening of this candle right here, sell it. And what happened after we sold it? It went down like 20 points. You could have got some money out of that, right? For sure. For sure, man. Here's another one. higher close, sell it, and down it goes. It went down really good. This one, if you would have held on to it. So if you would have held on to this one, it would have went down like 36 points. Or ticks, or tacks, or, you know, whatever you want to call them. Then we had another trade. Let me show you, ladies and gentlemen. Okay? Right here. Higher close, sell it on the opening of the next candle, and fucking down it goes. Okay? And here's the trade right here that just happened. Let me show you. Let me show you. So we got a higher close on this one, really close to my 5 EMA on the opening of the next candle right here, okay? We would sell it, and how much did it go down? It went down 27 points, ladies and gentlemen. Somewhere between the entry of the trade and the bottom of this candle, you need to make a decision. You need to go, holy fuck, I'm in profit right now. And then there's the old saying, if you don't take it, the market will, right? So that's another winning trade right there. Boom, sell it. Boom, sell it. Boom, sell it. Boom, sell it again. How did we know to sell these little rallies back up? Because the stupid, silly 5 EMA was below the 7 EMA. On the way up here, how do we know to just buy only? Because the 5, silly EMA 5, is above the silly EMA 7. I don't call them silly. I'm just being sarcastic here. Like, I know a lot of people, they do not believe in these moving averages. They've been told by these gurus or whoever that, oh, don't use lagging indicators. They won't help you. You're always going to be looking at price in the past. And that is not true. That is so not true. Okay? Take it from me. I've been fucking trading since 2001. That's a long freaking time. I know what I'm talking about. I stare at these fucking candles every day for hours and hours, 10, 12 hours a day to try and learn everything about them. You know? You know what I'm saying? Like, it's crazy. Here's one more thing, and then I'll get on with this fucking video and my trade setups on different pairs. Okay? The one thing I did learn lately is when the price is grinding up on the fucking way up, sorry about my swearing, it rolls back, goes up again, rolls back, goes up again, rolls back, goes up again, and then rolls back, and then goes up again. All the way up, it keeps rolling up and rolling back, rolling up and rolling back. Why do you think it's doing that? Because people are in profit at different points in the market, right? And if you're long, because this is an uptrend, their algo or whatever's doing this, they know that most retail traders, or you can call it, or us, the other side of this, we're the other side of them. That's what it is. All the time, we're the other side of them, whoever them are, okay? So they have it rigged that it's just on the way in an uptrend, it's going up and rolling back, going up and rolling back. In a downtrend, okay, it's going down and rolling back up, going down, rolling back up. And it's hard. It's very difficult to try and take your profits when it's doing this. Do you see what I'm fucking saying to you guys? Okay? Anyway. All the time in the market, people are trying to take profits. People are trying to avoid losses, whatever. But the way the market price moves all on its own, it's against you. It's against your odds of trying to take profit. You see what I'm saying? And most people, they don't get into a trade and hold on to it, and just let it go and go and go. Like, they don't get in like most people don't get in like up here and hold it all the way down here. You see it? You see what I'm saying? They get out. They get in and out, in and out, in and out. And then they look at their statement at the end of the day and they go, holy fuck, I did 30 fucking trades today. When I should only do maybe 1, two. If you do one and you do real good on it, you should just be the one and done, right? But most people, they can't. They can't. It's like a candy store. It's going in the candy store and going, oh, look, I have some grape jubes here. I have some strawberry licorice here. Oh, I gotta have this. Oh, I gotta have that. And they're in and out, in and out, in and out of the market all day long, Marianne. See what I'm saying? When you should be really just looking for one, two, maybe three trades in a day. She's pushing back down now, eh? Goes to an all-time new high right up here, and now we're pushing back. Way down here through the low of the day. I think so. Yeah, there, we just broke the low of the day, see? Watch them take it all the way fucking back down here now. The motherfuckers. Look at it drop, man, like a rock. Oh, yeah. And I was short just a few minutes ago, too. But I got out. I took my little profit. You know, I guess fear does that to you. You see a profit, you take it. Then look what happens. Have you ever noticed just after you get out of a trade and you take this measly little fucking profit, like maybe 5 or 10 ticks, what happens after that? I know the answer. It drops like this. If you were short from up here, let's say, well, right here, let's say you got in right here and you took 5 or 10 ticks or points right here, what it usually does after you get out, it just crashes with profit. But you're not in it anymore. That's how crazy this game is. But believe me, what I just told you about the roll-ups and the roll-downs, that's so true, man. And that's why it's doing. They're filling orders, filling orders, filling orders, filling orders, taking profits. That's what they do. That's their job. And we're on the other side, unfortunately. Sorry, I had to take some water. I've been talking real fast, too long here now about my know-how of markets. Oh, yeah. Okay, we're done with the NASDAQ, okay? There were some beautiful trades here, scalper trades. There was a beautiful longer-term trade here with this divergence right here. Let's move on to the S&P and see what it did. Does it look exactly like this? Let's go see. I bet you it looks exactly like this chart. Yeah, see? Same shit on the other chart. Okay, anyway. Let's make it smaller and see. Do we have... No, same thing. This is a little lower than this. There should be divergence right here, ladies and gents. Should be. Woulda, coulda, shoulda, but didn't. But if we draw it like this, no, it's still just, it's like flat, man. See? Oh, hold on. Yeah, we could kind of, tweak it and, and say it is divergence to the upside, yeah, kind of thing. It did go up nicely today. So let's get back to the other trades. So on the way up, this would have been a good one right here. Lower close. Buy it. And then open of the next candle, which is why I put the thumbs up to the candle beside the pullback lower close candle and buy it, and up it goes. 17.5 points. And here's another one. If you're buying, let me also tell you this also, okay? I mean to say it all the time. I just got so much of how this market moves in my fucking noggin that I forget. Okay, I just want to say you come to the market, right? Right here, and it just rallied up. Right there, okay? Come on, go straight for me. There. So you bought right there. You know what that is? After it just rallied up like that, And that's where everybody seems to want to get in, because our minds are wired to buy after a rally, sell after, like a drop. And it's because we wanted to prove to ourselves, oh, it's going to go up, it's going to go up, right? But in reality, if you buy after it just rallies up and you buy at almost the high of the candle, it's a mistake, okay? If you sell, look over here now, if you sell at the bottom of a candle that just dropped immensely, it's a mistake. You know why? Because more than likely when you buy at the top of a rally of a candle, it'll retrace back down and scare the living caca out of you, and you'll get out of the trade with a loss. Same thing over here, okay? If you sell after a candle just dropped and closed near the low of the candle, and you sell right here, yeah, it might give you a few ticks if you were quick enough to take them. But if you weren't quick enough to take them, look what happened when you sold right here. It went right back up here. And right up here, when the price is way up here, you're going to be going, fuck. Look at this. Oh, why did I sell down there? Why? Oh, I'm an idiot. Oh, I'm a fucking idiot. And look what happens. It goes up. The fear kicks in, because in your mind, when the price is up here, you're thinking, oh, fuck, we're going to go to higher highs. We're going to go right back up here again. I'm going to lose. And you jump out somewhere in here and you lose because you sold after it just sold off. And you bought after they just rallied it up. Rip it up. That's why we have the saying, buy the dip, sell the rip. Okay? So right here, this is a dip. We buy the dip and sell the rip up here. You see what I mean, guys? This is a no-no. You know what I'm saying? If you cannot get in from like the bottom of the move down here, and you're trying to jump in at some random spot all the way up, you gotta understand that you can't buy it at the fucking top of a candle that just rallied up. You need to buy a dip. You need to buy when price is coming down. I know your mind's wired and it's saying, oh, it's going to keep going down. It's going to keep going down. I'm going to sell. And what happens after you sell? Because you see this red candle, it goes back up and you lose. You got to get it in your mind that you want to buy after the price just came down, or you want to sell after the price just rallied up, like right here. See what I mean? So if you would have sold right here instead of buying, look at how much it went down and you would have made. You see what I'm saying? Yeah. I've meant to say that to you for the longest time, and I keep forgetting. I'm sorry. A lot rolling around in my head about these markets and how they move and how they tick up and how they tick down. It's a lot. It's a lot. It takes a lot to learn all this stuff. And I'm more than happy to share it with you, whoever's willing to listen. And in the future from now, maybe in 2050 or 2100, I hope YouTube's still around and you guys are watching my videos. I would be like long time dead now, but you're still learning from my knowledge of 23 years in the markets. Alrighty then, let's move on. Okay, the Dow, what did it do? Oh, we have some nice hidden divergence right there. Like, this is how crazy it is. I've been looking at these charts for 12 years, and I know, how to find the divergence. I just have to flick to a new instrument, and within 2 seconds, just glancing the fucking chart, I already see the setup and where it was. You know what I mean? I see the 2 setups, and I'm going to mark them for you right now. There was this one. And right from here, up here, and we would have got long in here. Yep. Would have got long right there. And it went up 166 points from that point of entry. Now my hand's gonna... I got arthritis in my freaking fingers now. I gotta like fight it every day and crack my knuckles and fuck. It's not fun. I just pick up a garbage pail for a second and my hands like cramp up like it. It's not fun. Anyway, so this is what I call hard to see divergence, okay? But it's known in the world of other traders, hidden divergence. So this was hidden divergence, and you would have bought right here, okay? Your stop is always at the swing low where it just seems to not come back there most of the time. And anyway, she went up, yeah, like I said, 160 points. But along the way, if you did not get in down here or down here, okay, and you wanted to jump in along the way of it going up, you would look for a lower close price to get in, so you don't suffer from drawdown and freak out and get out with a loss. So instead, you get in right here. So you need the price to come down is when you're looking to buy. And in a downtrend, you need the price to come up where you look to sell it in a downtrend. See what I'm saying? Buy the dips, sell the rallies. That's the famous saying from a long time ago. So there was this trade, and we have one more up here, okay? Lower close, buy it right there, up it goes. And there's a couple more, but it's kind of dangerous. The more it prints a fucking barcode here, it's going sideways, you don't want to do that. You know what I'm saying? But here's the second trade. Here's the first divergence trade, and here's the second one. And it's just simply like a 4x top, like 4 times it came back up here. See? 1, 2, 3, 4 times, and then they smacked the fucker down. So that is a double top bearish divergence trade right there. Okay? Let's move on now to, I didn't draw. I forgot. Jason, come on. Right here. Here's the divergence for this trade, and this trade up here is right here. Okay? Wherever you want to draw it. Divergence to buy it up. Double top divergence to sell it down. Yeah, I wonder if she'll come right back down to here again. Wait and see. That is the Dow. Let's look at the pound dollar now. Oh, look at all that, eh? There's no divergence down here because this needs to be less on the right side of it than the left side. So there's no divergence to buy here. However, if you trust moving averages like me, after it came down this good way, when the 5 crossed up above the 7 right here, let me make that bigger and yeah, right here. So when it crossed up, you would have, wait for a lower close. If you don't like how it just rallied up, that's not much. Yeah, 11 pips. So if you would have bought the dip right here, okay, right there. And here's another one, lower close, buy it, up it goes. Lower close, buy it, up it goes. Lower close, buy it, and went sideways, and then went up, and there it goes. But anyway, yeah. Lower close right here. Buy it on the opening of the next candle, up it goes. Buy the dips, sell the rallies. On the way up, when the 5's above the 7, you're looking to buy dips. When, the 5 is below the 7, like over here, here's the trade first. Let me show you. Here is a double top, okay, right there. And there's the divergence right there. So we would have got short right in here. 10 pips. Went down 20. There's 2-to-1 win-loss ratio right there. Yeah, and there's that. So, like I said, on the way down, you're looking for a higher close candle and sell it, and down it goes. See how much better that is? When you, even though it's not very much that it rallied up the body of the candle, like right here, it's still a pullback. And when you sell on a pullback, that's where that's where people want to sell. So that's your best place to sell. Your worst place to sell would have been right here at the bottom of this wick after it just dropped down. Going, FOMO, fucking FOMO. And then you sell it down here and it comes back up here and you're going, fuck, why did I do that? Why? And you would get out with a loss. That's why you got to buy the dips and sell the rallies. And I just want to say, I know I kind of sound like abrupt, like as if I'm your father and I'm scolding you. Don't take it that way, okay? It's just the way I talk. My dad was abrupt and I got it from him. So don't take it like I'm yelling at you and bitching at you. Just take it as knowledge, okay? Because that's the way I talk. And yes, I can talk all sweet and pretty, but I don't want to do that. This is just the way I talk, okay? Don't be offended by the way I talk. I know there's people who they don't like to listen to me because I sound like I'm their father getting mad at them. I just wanted to make that point. Anyway, so there's the two trades and the other two trades, the buy trades and the sell trades, okay? Okay, Euro. What's the Euro doing? What did it do? I don't really see clear divergence here either, but I do up here. Let me show you. High and higher high. Let me make that chart bigger. We'll just take the auto scroll off. Okay, so you can see it clearly. So you would have sold right in here, waited for the pullback, okay? So somewhere in here you would have sold it. And so you sold on the higher close candle. You want to sell it. You always want to sell it at a better price, or you always want to buy it at a better price. You always want to sell it at a higher price and buy at a lower price. That's right. As backwards as that sounds, you want to sell it when price is going up, basically, and you want to buy it when price is coming down. Isn't that weird, eh? But it's so true, man. It's so true. So say you sold it right there. Well, max you would have got from it is 13 pips. But somewhere in here as it went down, okay, is where you would have got in and made a decision and took your profit. Okay, and then see right here, this needs to be lower than this side, see? Let me draw that there. Oh, I'd call that level divergence. I used to be a bricklayer, eh? In my young days when I was like 24 years old. A long time ago. So I know when something's level, is what I'm trying to say. But anyway, I call this level divergence. It's something I have found myself. Nobody would ever talk about it. They would look at this and say it's not divergent. But to me, as long as the candle, rallied up, closed near the top of the candle, the 5 crossed up and stayed up there above the 7, this would be a try trade, a buy trade right here. Okay? And it went up 10 pips. Yeah, it's the euro, man. What do you want from it? Not much. But anyway. And we had one more trade over here, which I would call a double top right up there. And we would have got short right in here. Our stop would be at the swing high, 9 pips. Went down 14 pips to there, 18 pips down there. But you know what the best thing is once you entered the trade right here, right? I got to ask you this question. Your stop is up here, okay? When you sold it right here, did the price come back up and stop you out? No. No, it didn't. No, it didn't. Oh, we have one more trade here. I just saw it. Right here. And you would have had a buy in there. Oh, wrong thing. So like I said, I usually like to wait for it to close up above the moving averages. And anyway, so if we would have got in here, the stop would have been 6.5 pips. Did we get 6? Yeah, we got it. 8 pips. So anyway, I just want to say you always look on the chart first for the, for the divergence, where I draw lines on there to show that it's divergent, that this one's going up, this one's going down. This is, divergence, right? Kind of thing. And it's easier to see it when I draw the lines on there to show you. That's why I draw all these lines on the chart. Okay, so anyway, when you got in this trade, did the price come back down right here where I tell you to put your stop? No, it didn't. No. Ask me, how come it does that all the time? I don't fucking know. All that I know is I see it happen all the time. And for like 13 years since I've been looking at the charts, looking for divergence. That's what makes this so beautiful, is that they go after the stops and then they take it up, and that's where we get in. We get in after they take out the stops, take out people's stops, It's a crazy thing, but it is what it is. I can show you tomorrow, I can show you in 6 months from now, the same thing, that we'll get in. I'll show you where the divergence is. I'll show you where we get in the trade, and I'll show you how the price did not come back and hit your stop where I tell you to put the stop. You always put your stop at the swing low in a buy trade, and you always put your stop at the swing high in a sell trade setup. That is divergence, of course. You need the divergence. There's something with this divergence, I'm telling you. If you know how to trade it and do it, you can make, and you can shake, and you can bake, baby. You can shake and bake the profits. Yes, indeed. Oh, this is a long one today. Okay, I got to wrap this up now. Oh, geez, I need to go out and I need to go walking today. I didn't go for the last 2 days. I've been bad. I got to go for a walk. Okay, let's check out that was the Euro USD. Let's look at the pound yen now. See what did it do? It did some good shit. I already drew them on here. I was showing somebody. Here's the hidden divergence, right? There's trade setup number 1. Let me show you trade setup. We're going to go right into all of the setups here today on both sessions, the UK session and the US session. We're going to show you all the setups. Okay, ladies and gents. So this first setup, okay, if we would have got in right here, our stop would be at the swing low, 9 points or whatever. We definitely got our 9 points. It actually went up 21 points. So you could have got 2-to-1 win-loss ratio on this buy trade right here. Okay. Then we had a sell trade right up here, but it would be a sell trade against the general trend, because from here, see, we went up, retraced, went up, retraced, went up, retraced, went up. So we're in a bull trend, okay? So would you want to waste your time and do this sell trade? Well, you coulda, if you wanted to, and you still would have made, let me open this up now. You still would have made points. So your trade would be right here on the opening of this candle. Your stop always at the swing low, 14-point stop or pip stop. This is the pound yen. And look. It just went to 14.4. So, like I told you before, if it comes within a damn pip or two from your take profit, just close the trade and take your money and run. Don't stand there and be stubborn and go, oh, it missed it. Oh, I'm going to hold on. It's going to go. I'm holding on until it goes to my take profit. The market doesn't know where your take profit is. And the market doesn't give a shit where your fucking take profit is. Okay? A lot of the times, it won't go there. It'll miss it by 1 pip. And then you'll be going, fuck. Me? if it comes within a pip or two of my target, I take it. I take it and run. Because if you don't take it, the market will. And the market did right here. It went back up. So anyway, that's from selling the sell in an uptrend when you really should just avoid this trade at all costs. Because it's in an uptrend. And the next trade you want to take in the uptrade to trade with in an uptrend to trade with the trend, you want to do the buy setups, not the sell setups. So our next trade is right here. Fuck, am I talking a lot today, Mozi? Mozi, motherfucker. Okay, so it goes right to here. Let me just move this arrow out of the way a little bit. There, right there. So there's the pullback, the higher highs, and then the pullback. And that's where you always look for the divergence first on the candlestick chart. Then you look at, the indicator that you want to use, whether it's RSI, MACD, or Joe G, or whatever. I use the OSMA, only the OSMA. It is the best indicator on the planet and in space, okay, to find the divergence. Because it stands out at you. It's just like, it's yelling at you. You go put the MACD right here, these mountains and these valleys will be 70% less prominent on the chart, which means it's harder to see the divergence setups. That's why I use the OSMA and have been using it since 2011 when I started looking for divergence and I started trading divergence. Okay, so we would have got in right here. We'll just say it right there. Okay, our stop is at the swing low, 15 pips, and up it goes. There's your 15 pips right there. There's your 30 pips right there. 1-to-1 or 2-to-1 win-loss ratio right there. Okay? And I just have to ask you this question every time. When you bought in here somewhere, did it come back here where your stop was? Nope. When you sold right here and your stop was right here at the swing high, did the price come back? Like in this down run, I mean, not over here because it came back here, but we're already in another trade over here. But when the price was, coming down here, did it come back up and get your stop up here? No, sir. No, ma'am. No way. Don't ask me why. It just does it. So anyway, you all know that I always go for a 1-to-1 win-loss ratio. So whatever from my entry point to the stop loss of the swing high, that is going to be the same exact amount I choose for my take profit, which is down here, 14 pips, okay? And we just luckily excuse me, we just made it to our take profit. Talking too much, man. Holy fuck. So, anyway, this was the second winner of the day. It gave us 1-to-1 or 2-to-1 win-loss ratio. And then up here, there was another, according to me anyway, double top right there, okay? And we draw it from here down to here. So it would have sold right here in this little blue candle, okay, at 191, and that is the accurate price for this because it's Forex, okay? So we would have got short right here. Because the 5 crossed down below the 7, we would have got short right there, okay, right in here. Our stop would be right here at the swing high, 11 pips. Did we get 11 pips? You betcha we did. We got the 11 pips within 10 minutes, which is right there. There's our 2-to-1 win-loss ratio. So for people who think it's going to keep going down and they're going to, get 2-to-1, 3-to-1, 4-to-1, 5-to-1, RR, hey, all the power to you. So how I used to do it in the old days, I don't trade like this today, but you'd have two orders. Okay? When you hit the first target, which is right here where I'm showing you, your first trade, you would close that trade, and then you'd move on your second order, you'd move your stop from up here to break even right here. See what I'm saying? That's how I used to do that. But I don't trade like that. I just try and go whatever. But anyway, I'm not a financial advisor. I'm not giving you any financial advice. I'm just telling you that's how some traders do it. So anyway, we had a trade right here, okay? To buy it. Oh, look at that, eh? They took it right down to 190.50 right here. And why is it going up right off that level? I don't know. Why did they sell off this level? Oh, and here too. Why did they sell here at 191? Because those are whole numbers, man. Those are very important. That's why I got them on my chart. But anyway, just for day trading, scalping, you know. So there's a trade here, okay, right there. And, you know, somewhere in here you'd have to get in, I guess. I don't know. If you waited for it to close up here, well, you're in trouble because it didn't go far. You're in profit of maybe 4 pips, and then it came back down and freaked you out. So it's like a buy fake that happened here twice, which created a double top at the 191 level, okay? So here's the double top. I did this trade today, actually. And I got out down here. But anyway, so you would have sold it right there. Stop was 10 pips. Did it go down 10? Yeah, it went down 10 here where I got out. But anyway, there's your 1-to-1 win-loss ratio. Excuse me. And then there's one more trade setup, okay, that I want to show you. A+ trade setup. I gotta give you just 10 more likes. 10 more likes and I'll give you an A+ setup. Anyway, I'm mocking something right now. Don't mind me. Just mocking something. Here's another buy fake right here. See, low and lower lows. You can get faked out here and there all the time. You know, it is what it is, right? I'm showing every setup on here, whether they win or they fucking lose, okay? So, right here, if you bought it right here, it was a buy fake, and your stop was right here. Here's an example where the price buy faked you and came back down and got your stop right there, where I told you like 9 times out of 10, it doesn't do that. It doesn't go back to your stop. But it did here, okay? But there's also divergence here. When it came down in here, I would have bailed out. If I was long right here, I would have bailed out right here because they smacked it down. I would have got out because I would probably think, they're probably going to keep smacking it down here for now, which they did. So anyway, wow, this is a long video today. Maybe this is my longest video ever. So I call this like a double whammy. You got one divergence telling you to buy it and hopefully it'll go back up. Then you have a hidden divergence right here telling you to sell it down. Let me draw the line for this sell hidden divergence trade. It's right here from this blue doodah, okay, right there like that. So on this trade, you would have entered right here, okay? So let's just say you wanted to do both trades, right? So you would have bought it right here. Let me just show you. Right there. And let's just say you didn't get out up here like I would have, okay? And you got out here, you would have lost 12.5 pips. And then at the same time, if you're quick enough to see it, which I'm sure it's pretty hard to find it. Here's the sell trade. How far did it go down? 20 pips. So say you got 17 pips out of this trade. So you lost the 12 here and you got the 17 back, let's say. You would have got your loss back and you would have been up like 4 or 5 pips. on these two trades. The buy trade, that was a buy fake and you got stopped out. And then the sell trade that came down and you took your 17 pips. You would have been okay. That's all the trades today on the pound yen. And the reason why I went into detail on this chart today, a friend of mine, he's gonna see what I'm saying here. So anyway, let's move on here to the euro yen. And what did it give us? Yeah, it's very choppy. I don't trade the euro yen. But there was a trade. I'd probably want to put this on the 15-minute. Yeah, there it is. That's better. Remember I told you any time where it's too choppy, you're on the 5-minute, you gotta go up, man. You gotta go up to the, to the 15-minute. Okay, so we have our higher highs on the chart, and on the indicator, we have our lower low. Okay, so once the 5 crossed down below the 7, we would have sold it right there. Okay, right on the opening of this candle right here. Would have got short. Our stop would be at the swing high. Remember, always the swing high, 10 pips. And how much did it go down to the bottom? 42 pips. Awesome. Would have got some good pips out of that. Let's look at gold now. Yeah, this one. Yes, there's divergence. Are you listening, Fook? Are you listening, buddy? Here's the trade for you today. Right there, low and lower lows. Fook is a student of mine. For the longest time, he wanted to look at gold, and I kept saying, nah, that gold isn't the best for, divergence friendly, right? So I didn't do it until now. I look at it for him. So anyway, we have two trades here. We have this trade right here. We're on the 15-minute. Okay, would have got long there. Our stop would have been there. 33 pip stop. How much did it go up? Went up 95 points to there. Then we had another trade, ladies and gentlemen, from here to this pullback here. And from here to right here. We would have got long right in here. Right there. Either there on the candle close, or you wait for a pullback and close, and as soon as it closes, you buy right here on the next candle that opens, and up it went. Yes, indeed. Went up 110 points to the top on that one and this one. There's also basically another trade right here too, if you want to just look at it. It's like, to me, it's not perfect. It's close enough, right? It's a double top, man, and it's sold off. That's all. And here's the the thing going down. That's what we want to see. Would have sold right there. Stop would have been 23 points. Did it go down 23 points? Oh yeah, went down 70 points down there. Another good trade. Another good trade. Boom and boom and boom. 1, 2, 3 trades, making lots of points on the 15-minute time frame for this now, okay? Because it's gold. And I got my last one to look at here. Where is it? Right here. Oil. What did oil do today? Oh, it looks quite messy. But I do see the one trade. Actually, two trades. Let me show you. From here to here. Okay. Oh. Maybe this isn't a trade. Okay, we'll just draw it. We'll tweak it a little bit, right? Tweaking is okay. Yeah. Here's the little blue doodads. Yeah. Look, let me show you when I widen this up. Look. See right here? We want this to be higher on this side of the mountain peak. And this is the foothills. This is the foothill of Alberta, and here's the top of the mountain peak in British Columbia. Okay, if you know Canada, that's what we're looking at. We're looking at mountain peaks and valleys with deep rivers in the valleys. Okay, so anyway, there's the trade right there, and I have one more to show you, and we're done. Right there, would have got short. Our stop would be right there, only 21 ticks. And down it went, all the way down here, 100. Okay? Then we had one more trade. Let me show you. Okay? So from here to here, it's hidden divergence, hidden bearish divergence. And from here to here, that is, they are diverging from each other. Wow, I never talked this long on a video. But there's a lot of good stuff in here you guys can learn from. Whether it's 21-22, the year 21-22, or it's the year February of 23. You're going to learn from this video. Okay, so anyway, we would have got short. I don't know if you'd want to do this trade because it just, after it made this high, they just slammed it down to a new low right here for the day. So somewhere in here, if it was me, okay, let me make this bigger. I would look to sell right below this wick right here. So if I sold right below that wick, my stop is at the swing high, 44 ticks. Did we get 44 ticks? We did. Awesome. 52 ticks we got. We got our 1-to-1 win-loss ratio right there. Yeah, finally, it's done. What a long video. Anyway, I want to thank you for coming out to the show today and watching my divergence setups. I really appreciate all of you coming out. I really do. If you could please hit the like button today. I did go out of my way, a very long way today, to explain a lot of really good things that you need to know as a trader. That should help you to, do better in the markets. So anyway, thank you. Please hit the like button. Please subscribe if you haven't. And good luck and good trading.